Dow plunges 1,500 points and dollar weakens as recession fears grip Wall Street. Market evaluation. Economic storm ahead. Analyzing the fallout of Trump's tariffs and recession. Historic market plunge. Dow drops 1,500 points, 3.6%. S&P 500 down 4%. Nasdaq sinks 4.9%. Worst day since 2022. Global domino effect. European and Asian markets tumble as trade war fears escalate. Dollar weakens, safe havens surge, gold reaches record 3,160 Oz. Treasury yields plummet, recession warning. JP Morgan predicts a 2025 recession if tariffs hold, citing 660 BD annual tax hike on Americans and a 2% CPI inflation spike. Business. Backlash. CEOs warn of major harm to manufacturers, workers, and exporters. Market reaction. A prelude to deeper turmoil. The sharp sell-off on Wall Street reflects panic over Trump's sweeping tariffs, 10 to 50% on all imports, which could trigger retaliatory tariffs from trading partners, EU, China, Mexico. Crush corporate profits reliant on global supply chains. Tech, automakers, retail. Worsen inflation. JP Morgan estimates tariffs could add 2% to CPI, complicating Fed rate cuts. What to watch? Fed response. Will Powell accelerate rate cuts to offset economic damage? Corporate earnings. Q2 guidance cuts may amplify market volatility. Dollars decline in the rush to safe havens paradox. Tariffs typically strengthen the dollar, but loss of confidence in U.S. growth sent it to October 2023 lows. Meanwhile, gold surged 19% YTD, best quarter since 1986. Treasury yields dropped as investors fled to bonds. Implication: markets are pricing in stagflation, stagnant growth plus inflation, a worst-case scenario. Recession risks. How likely is a 2025 downturn? JP Morgan's warning. Prior odds of recession, 40%. Post-tariff odds, 60% plus. 660B consumer tax hit equals 3% of GDP, a massive demand shock. Global spillover. Europe, Asia face export collapses, risking synchronized recession. Historical parallels. 1930, Smoot-Hawley Act worsened the Great Depression. Trump's tariffs would push U.S. rates to 22%, higher than Smoot-Hawley's cost of 20% to weeks 4. Sector-specific impacts. Losers. Automakers. Tariffs on imported parts could raise car prices 10–15%. Retail. Walmart, Target face margin squeezes as consumer budgets shrink. Tech. Apple, Nvidia vulnerable to supply chain disruptions. Winners. Domestic steel, aluminum, protected by tariffs, e.g. Nucor, U.S. Steel. Gold miners, Newmont, Barrick, and defensive stocks, utilities, healthcare. What comes? Next, through scenarios: full-blown trade war, 60% probability. Retaliatory tariffs spark global GDP contraction. S&P 500 could drop another 10–15% by Q4. Negotiated rollback, 30%. Trump walks back tariffs after market turmoil. Relief rally lifts equities, but volatility persists. Stagflation, 10%. Inflation stays high while growth stalls. 970s-style malaise with soaring gold and bond prices. Investor action. P bottom line. The tariffs are a game changer, but markets may overreact. Stay nimble. This could be the buying opportunity of 2024 if tensions ease. Controversy. Trump's policies spark debate.